Today I'm going to show you how to trade the forex markets with zero stress. Let's begin our trading session. We are currently on Euro USD. What do you need to trade forex without stress? A lot of people been asking me, what do you do? Well, if you're a beginner trader and you're new to forex, you need to trade the daily time frames, the high time frames. Don't try to be scalping and learning everything in a day. It will come. You will be able to scalp, but first thing, you need to learn the fundamentals. And learning the fundamentals, and the easiest way to do so is trading the daily, weekly and the monthly time frame. So let me show you what I mean. Have a little look at this. Look at so much price action is happening, but barely any candlesticks are moving. This is good because it doesn't lead you to believe that there's moves happening, big moves happening. If we have a look at, let's say, 1 minute time frame, look how much movement is happening in here every single time. Now look, we're having a break, let's say over here, or trying to break. It gave us a bearish engulfing candle. Should we enter, sell now? You get confused, you get too scared, you open up your broker account. Oh my god, I don't know what stop loss to put. You get stressed out, right? If you're trading, and scalping. And that's why I don't scalp personally. Sometimes I do if I see a very good opportunity or there's fundamental news that's happening, but definitely, trade, as you can see, is going down because it broke out, which is expected. But as I said, more than likely the way you want to trade is trade the daily time frames. This is probably gonna go down. I just want to see how many pips is that fall actually real quick. So 2.6 pips, that would have been a little bit profitable. It will probably go down till this level over here. But anyway, let's get back to the topic. I always go off topic. Daily time frames. What do you need? So you mark areas of sensitivity. We're going to be trading the daily time frames, entering on the daily time frame. So what we want to do is analyze even bigger time frames, such as the monthly. So what do we see on the monthly time frame on Euro USD? We see this downtrend over here. What makes it a downtrend? Well, I told you many times before, if we just use the brush tool, 1, 2, 3 touches confirms the downtrend. Now 4, 5 touches. Every time it touched this area, we see down movements over here, and currently that's what's happening. So very nice indeed. So every time, more than likely every time it touches this zone somewhere around here, it will probably drop down. But currently what's happening with Euro USD is, not forget, we have area of sensitivity, right? And if we just mark it over here, this is a monthly time frame, by the way, so it's very important level. As you can see, it did bounce off many times over here. It bounced off one time here, came back, bounced off multiple times towards the upside. It did have a break over here towards this level, which is another support level that you can mark, because obviously it bounced back over here. So if we just mark it, these two levels, we know that this first support level is over here, second support level is over here, right? So where is the market currently on the monthly time frame? Well, we know it's on a downtrend, right? This huge downtrend over here, and we know it's currently on a monthly support line. So what can we do? Well, we need to have a look at price action. Currently it has not broken yet, and there's still 9 days. If you have a look at the right hand side, there's still 9 days and 6 hours until this candlestick closes. So there's a ton of time, and we don't know what's gonna happen. So the price action has not yet happened, so we don't enter the trade now because we don't know what's happening on the weekly and the daily basis. We haven't analyzed yet. What do? We go into the weekly time frame. We go into the weekly and see, much more price action. We can see over here a downtrend. Fair to say, even the moving averages, the 25 and 50, which is my favorite moving averages, I always use them as say support and resistance levels. If you don't know how to use them, every time they in between these two lines, you start selling or buying depending on the market direction. In this case, we're selling it. So look, we would sell here, we would sell here, sell here, sell here. Look, every time it touched, it went down. Sell here, sell here, sell here. Then it broke out, but what's happening? It gave us a bearish engulfing candle, then a bullish engulfer, and now it's still a bullish. Even though it was a nice candle towards the downside over here, it was not bigger than the blue candle, which means that the bias is still a buy, although the monthly bias, we know that this is on a monthly downtrend as well. So what does this mean? We need to wait for price action to break this support level. This yellow support zone, if you remember, is the first support level on the monthly time frame. So we need it to break. The ideal break would be if there would be now a blue candle over here on the weekly time frame, and then we get a bearish engulfing candle, a red candle that's swallowing the previous blue candle going towards the downside. This would confirm a nice trade on the weekly time frame, and we would probably suspect there would be a lot of pips profit. Let's just have a look. If we shorted it, 384 pips at least to the next support level, level 2. So it would be a nice trade, definitely. So what do we do now? Since we analyzed it, we see, you know, it's on a downtrend over here as well, so likely it will move probably towards the downside. It's also getting squeezed, you know, the price action is there. We see it over here, you know, it's kind of, it was moving like that, and now it's kind of getting squeezed because of this support. So what happens? It's either gonna break towards the upside and bounce off this downtrend and then go back down, testing this level, or it's gonna break this zone over here, and if it does, then we wait for a pullback and enter again. This is the things we are expecting, but this is the weekly time frame, so we need to chill out. There's still 3 days and 6 hours left until the new candle, so it's, you know, it's slow and steady. But if you're new and a beginner, you need to understand that slow and steady is good for you. Look how many currencies there are on my right hand side: Euro USD, GBP USD, Euro GBP, AUD USD. You can go all day, you know, and there's ton of these currencies you can practice on. So just because nothing is happening on one currency pair, let's say it's 3 days till new candle, does not mean that nothing is happening on other currency pairs. So there's still a lot of opportunities, and you potentially can still trade 1 or 2 trades on the weekly basis, and this is more than enough if you're a new beginner trader. Trust me, managing 1 trade rather than 10 is much more easier and beneficial for you. You will be managing, you won't be so stressed, you will know what the hell's going on. It will be just much easier. That's all I'm saying. So what we need to do, we analyze all of this, we know what's going on, we know there's these moving averages as well, right? So we go into the daily time frame. What is happening on the daily? So on the daily time frame, we see the price action much more clearly now, right? We see this trend line that we draw, and we see, you know, a daily trend line as well, but I'm not gonna bother, you know, marking it. So we saw a lot of price action happening over here, obviously because of the coronavirus and all of that. You know, it went crazy a little bit, right? It went even outside the trend line, you know, the downtrend, but this is fundamental news, and that's why it corrected itself. We see it, you know, it went down, went back up, respected the trend line, the weekly trend line, which is very, very important. Since it respected this level, it probably means it's going to respect it again if it bounces back. So respected the level again, you know, previously it didn't respect, but because of the coronavirus, now it respected again. So the line that we drawn, the trend line, is actually worth something. And what do we see? So we see, you know, it moves towards the upside, right? There's no bearish or bullish engulfing candles. It kind of just drop. Then we had the bullish engulfing candle close over here, as you can see it. This previous red candle was much smaller than the blue candle next to it on the right hand side, and it shot towards the upside. But then we see these moving averages as well, curving 25 and 50, right? They in between, they curved. What could happen and what could potentially happen is the market now moves towards the upside, respects these, you know, 25 and 50 moving averages, because remember, on the weekly time frame, it's actually bouncing off. I told you, you know, the strategy is bouncing off on the weekly, and if it goes towards the upside, it might be on the weekly basis somewhere around here, and then it will start shooting towards the downside. So that's what you need to expect the markets to happen. I know it sounds crazy, and I know it might sound confusing, but once you start doing it and open the charts, you will understand it a little bit. Copy what I'm doing, you will understand it eventually. Just go through it. Forex is a grind, guys. If you want to learn Forex, it's a grind. It's nothing's easy. Honestly, nothing's easy. But if you put in the work, it's COVID-19. You know, there's lockdowns happening, so I don't know what you're doing. But if you're chilling at home, hey, learn Forex. You will be able to earn money from the comfort of your home. So as I said, if something like this happens, now the best scenario would be, you know, if the weekly, we wait for the weekly push towards the upside, and then we would enter a trade short, sell the trade towards the downside and make money. You know, that's the way I would do it personally. If let's say we enter somewhere around here, maybe expect maybe a bounce, you know, because still it's an area of sensitivity, right, this yellow, so maybe expect a bounce. It would be a nice 150 trade if it breaks this first support level, which is the monthly level marked in yellow over here. If it breaks towards the downside, has a pullback, then we are dropping back down again for another, what was it, like 300 pip profit. There we go, nearly 400 pip profit. And that's the way you would do it. And you would analyze all of these currency pairs on the right hand side, let's say GBP USD. And remember, GBP USD is correlating with Euro USD. So let's say you analyze Euro USD, more than likely the same thing will happen with GBP USD, because these two currency pairs move the same, usually move the same, I should say, on the daily time frame. If one is going down, GBP USD should be going down as well. Over here you see it's a little bit different, but most of the time on the daily, on the weekly, they correlate with each other. So if one moves, the other moves as well. And if you don't know what correlation is, you can Google Forex correlation pairs. On my FX book you can write, you know, let's say Euro USD and Euro CAD, how they correlate, and it shows the percentages, 40%, 50%. Actually, I'm gonna show you. So this is my FX book, Forex market correlation. I'm gonna leave a link down in the description below around this site. There's a ton of goodies in here, so you want to check it out. If you're new and you don't know what this is, it's gonna be helpful throughout. You know, it has a bunch of charts, bunch of stuff. You really want to check it out. AUD CAD, let's say, look, AUD CAD, how does it correlate with AUD JPY? 64%. AUD Swiss franc is correlating with AUD JPY, 98%. AUD JPY and AUD Swiss franc is actually correlated 98%. So if one is gonna decide to move towards the downside, the other one more than likely will move towards the downside. And it's very important to understand this, especially if you trade in multiple trades. If you don't like trading just one trade, you know, open one trade. If you like to open multiple trades, learning Forex correlation is the way to go, and you will understand more and you will be able to protect yourself, protect your profit. Because sometimes I see beginner traders trade, let's say Euro USD a buy and GBP USD a sell, and both of these currency pairs actually correlate with one another. So as I said, if Euro goes up, more than likely GBP USD will go up. But if you're selling one and buying one of them is gonna be a loser. So you need to make sure to do that. I hope this video helps you guys out. It's not the best video, but I really wanted to bring some value and let you guys know how to not get stressed in the Forex markets. Trade the higher time frames. It will be worth it, especially if you want to become a profitable Forex trader. So anyway, if you want to join my VAP Forex Signals group, you're more than welcome to. I'll leave a link down in the description below. Please check it out if you like to earn some money. We have over 150 members currently on our VAP Trading Signals group. I'm super happy and excited, and hope you guys are as well to join up. Also, make sure to subscribe and hit the notification bell if you found this video useful. I make videos 2 times per week. And peace out, guys. Have a wonderful day. Stay safe and goodbye.
Everything changes.